Rohit Srivastava is with us. He's fund manager with Sharekhan. Rohit, good morning. Good to have you here. Rohit was calling for a bottom the week before last, but I think, you can't never really, as they say, catch the exact bottom. But I think a little bit here and there, right, Rohit? So this is it, you think? At least for the short term?
I would like to hope so, but after the break that we got below 72.40, because that was the point up to which I was looking for a potential bottom, and once we broke that, 71.35 became the next level we also watched for for a turnaround. Now we can say that okay, this was just an excessive reaction, and we might have finally gotten it. But having broken those levels, opens up many other options on the downside as well, which we cannot just rule out on a one-day bounce back. So that said, now calling that we've already bottomed today just because we're doing this big rally may be a little difficult. I think we'll have to give it a couple of days. If it does sustain above 71.35, it might be the case, but the structure that is formed over the last week is giving a sense that maybe there's some more downside still possible. So we are being forced to take a step back after having been stopped out at that level, and give the market some more time.
A few people have been spoke to in the morning. They are not on air, just to clarify. There's the view that the prediction, the forecast is go up to about 7,400, 7,500 till the budget. After the budget, you sell off again. Nothing changes on the global front, etc. Those worries come back and we retest these levels. It's almost as if you read it in a book. But it could still happen, Rohit. What do you think?
It's fair to expect a budget rally, but like I said, the structure that is developed, and I'm also trying to think about it. What happened essentially is the broad market was the weakest in January, and it was pulling back into I think early part of Feb. So there was some sense that okay, you could get a bounce back that could have lasted till the budget day. But this break actually weakened that structure to a point where expecting a bounce of more than 1 to 2 days is a little difficult till we actually see it. That's one. Second, if I just put it on the global bit, yes, I think that was one of the reasons why I was expecting our market to actually hold up, is that so many markets were already deeply oversold, and your commodities were already reversing, except for I think crude, which is still not confirming a trend reversal, but most other base metals have actually rallied in the last month or so. So there were a lot of reasons why we could have held up and till at least the budget, but we didn't. So now to expect that you'd go all the way back to 75, 7600 is a little difficult. But let us see if it actually manages to stay above 71.35 for a day or two, maybe till tomorrow. I would like to wait and watch and see if that happens. Then it might be easier to make that call. Else our own market may be doing something slightly different than what we are seeing across, trying to anticipate based on what is happening everywhere. But that's not really working out right now.
Friday, the S&P was up 2% on Friday. No volumes though. But I'm assuming that after very sharp falls, the rebounds and the sharp rallies would be low volumes, right? Nobody would want to short or go. It basically would be mostly covering.
But on a single day that shouldn't happen. So usually, when you get a panic bottom, you get it on heavy volume, and when it bounces back, the volumes continue to reduce through the rally. So when you would actually make a 3-4 day rally, then the fourth day would probably see the lowest volumes, and that would be a sign that it's a weak run up. But this is a single day bounce which is on low volume, so that itself is not a clear sign that this bounce back is a larger counter trend move on the US market itself. So that's also not clear. It could be because, like I said, there are readings that do show that the US market should have bottomed, but some of those were around for some time and bottomed, I'm saying, only for a counter trend move. So note that even when I was looking for a 7200, 7300 bottom in India, I was looking at a trading rally from several indicators that were getting oversold. Not looking at a bull market per se. So now we are questioning, okay, will we go to 7500 and then fall, or will we fall from 7200? So I think that's becoming difficult. So then we start focusing on the key point that, yeah, in general, we are looking at the trend being down. Then catching those small rallies is, very, very difficult. So would you want to focus on that side of the trade or focus on the sell side of the trade? So we try to look at the upside if the potential is meaningful. Would have been, going from 7,200 back to 8,000 or higher, which is what I was trying to anticipate. But that kind of a meaningful rally now looks less probable. So then simply trying to work out a couple of 100 points here and there is less fruitful.
So, I mean, in practical terms, if somebody went long on Friday, then of course, I mean, this is good. But now, 500 points higher on the Sensex, 160 on the Nifty, the call becomes tougher because how much more is unclear, right? That's what you're saying.
Exactly. That's right. That's what I'm trying to say.
Right. But would you think short sellers could make a comeback, or no? That's unlikely. I mean, one reason why the market fell so easily last week was also because there were no buyers at all, right? I mean, it was almost a guaranteed thing. Sell, take money by the end of the day. So there was nobody standing with buy orders, not of any significant quantity anyway. Can they come back or no? Not for a while.
No, definitely the selling can completely come back. There's enough reason for that to happen. You need to watch a couple of indicators. For example, again, and this would be both a mix of local and global factors. One of them, which I've been talking about for long, is bond yields. So US bond yields have actually been falling with this rally in the US. But if I just look at the sentiment on US bond yields, it's like somewhere around 97% people being bullish on bonds. Now that's an extreme. And what I would be scared about, and which has been one of my long-term expectations, is at some point you're going to start what we call a third wave in the US bonds on the way down. And if we go back and look, essentially 2013 is when you got the first wave down in US bonds, and that had a significant impact on our market, not so much on the US, because typically there's some form of inversion. Money moves out of bonds and into equities. But when bond yields actually shoot up there, they actually have a negative impact on markets like ours, which have been attracting bond flows. So that third wave never really happened, though it's something that we've been waiting to as a major risk as and when it does show up. So at that point of time, I would expect Indian bond yields to actually shoot up. I would expect our own currency to come under pressure. So actually last week we saw the USD INR make a new high after a long wait. So that was one of the reasons to also be bullish, because the USD INR was not weakening with the market. But on Thursday or Friday, we did see it make one more new high, and it's pulling back a bit from there. So if we see that pressure come back to the Indian bond and currency markets, I think that would be a pressure point. And we might be on the edge of that trend actually starting. So the next time you see a US market rebound and US bond yields start to jump up, you could actually be in a similar scenario as what you were in 2013, where the US market was doing well, but bond yields shot up, and it had a direct impact on our yields and currencies. And our own yields have actually not been able to come down because of our own credit market pressures. And any upward move in yields in the US would actually end up being more negative for us. So that's one of the risks to watch out for, and for that reason, it's possible that we completely deviate from what happens in the world markets.
Rohit, thanks very much. Interesting conversation. As always, I'm out of time. I've had a few more, maybe next time. Thank you indeed for coming in.